Hi, everybody. February 26th. Scott Riley, the market update desk with Mortgage One, NMLS 157524. Got a few things going on in the market today. We've had a relatively calm week in regards to mortgage backed securities and 10-year treasuries. We're seeing the biggest player within earnings season come out after hours yesterday. NVIDIA showed that fourth quarter they hit 68.13 billion in earnings. Wow, that's a huge number. That was ahead of analyst expectations of 66.21. Total revenue did climb 73% from the figure NVIDIA reported just a year ago. Guidance also came in ahead of expectation. Now, the big thing that has been discussed about is the debate is now shifting from near-term results with NVIDIA and towards sustainability of AI CapEx spending and concerns around quantum monetization and potential cash flow degradation. So, yeah, they might have just kind of getting close to this inflection point of needing to show more, needing to show more lines of revenue and how that's going to be sustained. Now, the interesting thing, even though they hit all those numbers, their stock's actually down a little bit today. It rose after hours, but then down at the open today. Overall, the Dow is up, I think, about 40 points today, so it's in the green. One thing that we pay close attention to is rental data because it has such a big impact on shelter cost within inflation. Today, we got the Apartment List National Rent Report. Now, something that supports the continued disinflation in housing. Now, that makes up a huge part of the inflation reports that we see. Apartment List showed that in February, new rents rose by 0.2%. Now, that's up, but much less than previous year's same month. So, February is a month that does show usually an uptick, but we are down when compared to the last few Februarys. As a result, the year over year, new rents are down 1.5%, which is a bigger drop than previous reading of 1.4%. So we're getting some more slowdown in rents. Now, the list to lease time is actually near a record high since they started tracking it at 40 days now for lease to contract. This is causing a vacancy rate to inch up. It's now at 7.4%. Also, a record high since they started tracking these numbers in 2017. The data shows that the shelter figures in inflation reports will continue to fall because of this, especially the PCE report, because it's showing shelter rising at a rate of 3.3% year over year. New rents make up about 47% of rentals, while renewals make up around 53%. New rents are down 1.5%, as we previously talked about, while renewals are up 3%, as they have more pricing power with renters because people don't want to change and move if they don't have to. So blended together correctly shows the overall rents are only up about 0.9 year over year, not 3.3% within the shelter costs. Now, based on this overstatement, we can do some math, and it shows by correctly weighting it with what real-time data is, inflation's overstated by about 0.4. Without it, core would be at 2.6%, not 3%, inching closer to that quote Fed stated goal of 2%. Initial jobless claims did rise by 4,000 to 212,000. We actually expected this figure to be lower because of the holiday of President's Weekend. That always skews the numbers a little bit. Continuing claims did, though, drop 31,000 to 1.83 million. That's likely impacted from the holiday and expiring benefits. Mortgage-backed securities, they're actually trading higher a little bit today, and we're just slightly beneath overhead resistance of 100.38. The 10-year, we've been following very closely. It's been very kind to us over the last week. We're now sitting at 4.03. It's stayed in this real tight band. We're just barely holding above the floor resistance of 4%. Could we get to below 4%? That's going to be the big question, because the last 4 or 5 times, once we get to that 4%, we bounce up. That's why we started to do a lot of refinances right now. People are benefiting multiple hundreds of dollars per month, dropping mortgage insurance, changing from FHA to conventional, potentially lowering terms from 30 to 20 or 15 years. So there's a lot of options out there. Buyers are getting very active in the market. Don't wait because it's going to be a real busy spring. Give us a call. We'll break down the numbers, see how you can save money on a refi or get you pre approved, see what you can do on a new purchase and what program is best for you. Give us a call, 616 293 2189, the Market Update Desk. It's your original singular market news source for West Michigan. Looks like another sunny day. Let's go out there and have a great one.